Hey there everybody, welcome to today's ABLES update. We're going to be talking about how to deal with chop during these high volatility markets. I think it's especially important to be aware of how that could set up during the trading session, especially when the vol is high, because these are great periods of time to trade. Today we had a phenomenal trading session. We can see here just two textbook trade setups on the way up in the morning, and actually even a nice sell-off in the afternoon. This was about an 80-point gain. You can see more details here. We prepared an image showing the trades in the newsletter today. Today's topic is really going to focus on when things are not like this. We're seeing here that prices are starting to pull back here in the downtrend. It's important to note that when we have this daily downtrend, that the price action to the upside isn't always so friendly. If we look at the current price, we've still got almost 300 points up to the dots, so there could be some good room to trade. But there are two things that may make it a little bit more difficult to have an orderly trade up to the resistance there. First, on Thursday after the close, we have earnings coming out from Apple, so that should be a big effect on the NASDAQ futures. And then on Friday in the morning, we have unemployment numbers coming out. These both add uncertainty to the market, and they both have the potential to suppress trend development during the intraday session. And I'll show you what I mean by that. If we take a look at yesterday's trading session, we had Facebook earnings coming out after the close. You can see here there's a spike after the close, and we can see that the range expansion on the bar there. But leading up into that, the trading session really didn't have a particularly clear direction, although in the high volatility environment, the lack of a trend doesn't mean that there's a lack of risk. Add to that we have unemployment coming out on Friday, so that would really make tomorrow's trading session a very cautious trading session for market participants, because again, the added uncertainty on two elements really is going to make people less aggressively looking to form a trend, either up or down. Now, that might not sound like that big of a deal, but if we take a look at Wednesday's price action, we can see here right after the open. So this is actually the open. This sell-off here is pre-market, and right after the open, the price shoots up 145 points and takes out the intraday highs, actually the overnight highs. So when we establish the range as wide as we have here, on a day that's going to be a choppy day, you can expect that any of these there's not going to be a lot of good low-risk opportunities to take a stab. And any of these moves can be potentially giving up 10 to 15 points, like we have at the start of this move. Now, initially here, it would appear that we're looking for a continuation of the trend here. There's sort of a second shot looking for prices to continue up. But after that, it really sets the tone for the day. We can see the top of the range, the bottom of the range. It's a wide range, so if you are an active trader, really the thing to look for is for chances to trade from the top of the range to the bottom of the range, or vice versa. And we actually get an opportunity to do that toward the end of the day, going into the afternoon session. But you can see how, particularly lunchtime here, it's really messy and not a good trading session, even though the trading session ended up plus 120 points on the day. Now, coming into the afternoon here, it's really flat, right in the middle of the range, and then boom, looks like the market woke up and prices start higher. And that would have been one shot. There was a second shot here. Again, the risk is not as low as it may appear, and so we have to take that into consideration. And this move also going into the highs is not going to make it easy to stay with the position and going into the close. So it's just something to pay attention to going into tomorrow's trading session. For me personally, when I see this, and particularly because of the sort of dangerous nature of this, you might look at the price action and it looks like no big deal, but what may look like a string of small losing trades might end up to be something more than you're accustomed to during more conventional market conditions. So it's something that we just wanted to remind everybody about, to be particularly careful with the two events going into the end of the week.